Real estate space has been on a tear since the last quarter, and no wonder then when you're talking about the operational results or the operational updates that the companies are giving, quite a few of them are quite stellar. Soba Developers came up with its operational update a few days back, and it was quite good. Now today, Sunteck Realty Mumbai is one of Mumbai's premium real estate developers, also announced its Q3 operational update. Quite some strong figures actually being seen. So when you're talking about the pre-sales for Sunteck Realty, coming in at close to 349 crore for the third quarter of FY21, up 75% on a sequential basis. When you're comparing it on a year-on-year basis, it is up almost 7%. When you're talking about the collection figures, again, 252 crore is where Q3 FY21 collection figures stood at, up 79% on a sequential basis, and on a year-on-year basis has jumped up almost 52%. In fact, commenting on the Q3 FY21 performance, Mr. Kamal Kehta, the chairman as well as managing director of Sunteck Realty, said that a combination of favorable factors such as the reduced stamp duty, low interest rate is actually expediting the home purchase decision. He also said we are observing a trend of increased demand and renewed buyer interest for high quality products, especially those with strong balance sheet and high brand recall. Our project execution is ramping up according to him, and collections across their projects is sequentially growing, and he says we remain confident to maintain this strong trend. So overall, given the fact that Sunteck Realty, Soba Developers as well as whole host of brokerages have become quite positive, JP Morgan has written a note as far as the entire real estate space in India is concerned. They like amongst their top picks DLF, Prestige Estates as well as Godrej Properties. JP Morgan believes that the residential cycle turn is in the offering. They believe that the residential sales going forward are likely to be quite positive as far as developers are concerned. They say sales print in Q3 is likely to be higher across for most of the developers. The other thing that they're saying is that they are expecting the pre-sales print to be a key stock driver, and this is something that they believe markets will actually look at more closely rather than net debt. Remember, a lot of real estate players are saddled with higher net debt, but lower interest rate is something that actually helps them as well as the home buyer. JP Morgan believes that the balance sheet quality of listed developers is likely to be the main consolidation driver. Now, when you're talking about the entire real estate space, given the current socio-economic market dynamics, Sunteck Realty as well as other players, they're actually focusing on prudent cash flow management along with maintaining low debt levels as well as financial flexibility. The JD/JV model is something that is coming into focus, and players like Godrej Properties have taken this model quite strongly into their radar to ensure that they are managing to grow at fast, sustainable rates as well.